Good morning, folks. How are you? I did not plan well for this morning, so I am letting you know that there is an absence on my part to be able to hear when I do my audio check. So I'm going to ask you if you would, if you're following me on X, just let me know you can hear me okay. Just give me a 5x5 on audio, and then I'll do some jawboning with you until we get our 10 o'clock news. I'll hang out till around 10:10. Thank you, MB. Just a couple more people. I just want to make sure. Thank you, Jay. Well, thank you. All right, so hope you're doing well. And we're taking a look at June delivery contract. Now, there's a lot of rollover that's taking place. And whenever contract rollover occurs, generally it can cause some skewed price action. So think about it in terms of an algorithmic price run. If you know you're going to have an influx, let's say it that way, of participation because of the old front month, which is March delivery contract, rolling over to the new front month, which is June contract. This is June price action here. Okay, so I won't be pulling anything up on the March contract anymore today. But at the end of the day, I like to see how price action used similar price action PD arrays from the March contract. So there's going to be like this bleed over from old levels on March into June. I've started my work this morning with annotating all the chart price points that I like to have. And all of you that are asking for my notepad, like what am I recording? It's all of this. Okay. That's what's on my notepad from top to bottom in those price levels. That's all it is. Okay. That's it. So, and in end dogs as well. So any kind of key level that materialize like a first percent to fair value gap or a first percent to fair value gap that I think is going to likely draw to, I'll include that also wherever it is in terms of between key levels. Okay. Because we're in a very tight consolidation on the daily chart, your levels are going to be very close like this. You're going to see kind of like ghosting where it looks like it's so close. They're pretty much the same level. And if you look at this level here, March 9th and the 16th, I'm using that as the same regular trading hours opening range gap level. So it's acting as both. Generally, it's not like this, but because we have an unprecedented measure of consolidation on the daily chart, you're going to have these problems, and this is my way of dealing with it. So because it's a rollover, it's real easy for them to just keep offering higher prices, and that may be viewed by retail traders as buying pressure. And we have the 930 candle here, opening prices there. So look what we have there. So you have two pools of liquidity. I like how it's smooth in here, and I like how they left that. I'm not interested in taking a trade this morning because I'm collecting my levels, and I'm going to just tape read with you today around the 10 o'clock news event. So we'll hang out for 10 minutes past the hour, and then I'm going to take off and go spend some time with my wife this afternoon. So I won't be part of the Traders Roundup. I won't even be listening to it. But if you guys have it, I'll go back and listen to it later on this evening when I have time to do so. But usually I have like an engagement with you all there. I just don't have the schedule to permit that today. So I'm looking at this pool of liquidity because we right out of the gate, we're just straight up. That was a good song. Paul Abdul. Straight up now, tell me. Sing it, ICT. Sing it. Sonya, don't sing it. Don't sing it. Keep your day job as a demo baller. Okay, and then there's that. So we have minor sell side, bottom left, and we'll make that a little bit bigger. All right, so we are inside of a run to Thursday's regular trading hours opening range gap. That's what this white box is here. And a lot of these levels here, these small little fib levels, they're there just for me to get like a big macro list of the levels I like. And then what I do is when I watch a new day, like a new session like we're in right now, I'll annotate, I'll write market price at open, whatever that price is, and it's this one here at the open price at 9:30. And I'll write that in between wherever the key levels are here. For instance, it would be between this gradient level here, part of Thursday's regular trading hours opening range gap, and this March 1st new week opening gap low. So in between there, I would have that written out in my notepad. And then I'm watching price action. If I leave, say I leave the charts, I'm going to be taken to, and I'll be behind enemy grounds, okay, enemy territory, basically being taken to the stores shopping against my will. I'll have my notes. I'll just tear the page off and fold it in my pocket, and I'll look at it from the quote screen because obviously when I'm hanging out with my wife, she doesn't want me looking at the charts. So for me to stay intact and tight with price action, I'll look at my notes and say, okay, here's where we're at, and I don't need to know anything more. That's how I can trade without a chart. So the price action is going to be a little bit squirrely today. We're ahead of huge impact news drivers tomorrow, both of them occurring in the same day. So if you're going to try to trade tomorrow, you're asking to lose money, and it's just it's bad. It's bad if you try to deal with tomorrow. Thursday, after we do our tape reading here around the 10 o'clock hour, the the interest for me won't be there until Thursday morning session. So I'll resume active participation 7 a.m. Eastern time on Thursday, and then it'll be a regular closing Thursday and Friday environment for trading. But I want to take this stuff off just for a moment and go out to a daily chart. So here's what we're working with there, okay? And we're inside this little tiny gap between that wick and that wick. But it's part of, see how I changed that volume and balance? Keep your eye right here, okay? Watch what happens. See what I'm doing? I'm toggling that. So which one am I going to annotate? This one, because inefficiency shows here. Whenever there's a volume imbalance, that's the setting I'm using when I'm using this toggle thing here. Okay, you guys ask this question a lot, all the time. I get it all the time, no matter what video I post about. It's always in the comment section. Okay, so I'm going to give it to you again. I'm watching price action, and all I'm doing is just staring at one specific location in price action, last few candles, just staring there, and you'll see how volume imbalances exist by one setting or off. The one that shows the settings where there's a volume imbalance where it wouldn't be otherwise by the other one being toggled on or off, I'm using the one that has the volume imbalance. Okay. I will use both when there's a time to do so, and that goes outside the time that's permitted to talk today, but I will talk about it. But we can use this information like this. And then there's a volume imbalance down here. So this would be the entirety of that range. And then we can grade that there to there. And then we want to look at that separation between here with the actual wicks. So that way it'll give us a little bit of context in the lower time frames. And then we'll just gray that out. We'll just use this. We'll use that color. Something indifferent, not trying to indicate bullishness or bearishness. And then we can drop down into a 1 minute chart again, and that's where we're at. Okay. So from inefficiency perspective, in terms of where we're at in the daily range, that gap still has this much afforded to it on the upside if it wants to continue. But I like this smooth area here. I would prefer looking for a setup into this, and I don't care about this run here. And then in here, if we want to really, if it wants to correct lower. So what do I do when we're rolling over? Am I actively trying to push the live trading and try to build up a lot of equity? No. What I'm doing is I'm trying to get in sync with the new contract month. I'm trying to allow for the tomfoolery, the artifacts of rollover that's going to be attributed to price action, meaning I'm not taking a great deal of emphasis and significance and placing it on any short-term intraday price runs. So what I'm looking for is I like the fact that we, from 8 o'clock in the morning, we started running higher. At 9:30, we opened, traded down, and we left that low intact right there. So they left this. This is engineered sell side liquidity. It doesn't have to get here today. And they may end up using this tomorrow or later today in the restart at 6 p.m. Eastern time. It doesn't matter because I'm looking at these levels and then I want to see how does the new contract month consider these pools of liquidity. So it's kind of like the same thing I do after we have a FOMC or a non-farm payroll. I'm looking at what they're doing after the event. Now the event is we're in rollover. We're moving out of March into June contract. We have it run straight from the opening this morning, and it's higher. And we left perfect relative equal lows. This, look at the low. You're looking at this price up here, upper left-hand corner. That candlestick's low comes in at 24,962 even. So 62 even, and then this candlestick's low is 64 quarter. So it's 2.25 handles higher of a low than that one. So that this right here makes it a high probability candidate for a raid, or at least in the very minimum, consider this a relative equal low because the low to the right of this one is slightly higher. And obviously you can see the same thing existing here. So real smooth, and this sell side there. All right. So, and I'm not actively interested in trying to pursue a run up to the high of that inefficiency that we just annotated on the daily chart. So there are lots of times where I know that there's a probability for price to go to a specific price level, but it's not like most of you. If I say something about a particular level, if I say this sell side, immediately you think you're going in there, or I should be going in there and shorting right there. And then you come back later on and say, well, I hurt myself doing this because you're not trading. you're impulsively jumping on something that I'm saying my interest is in. So as I said, this is a level I'm interested in, but there's nothing to short on or take a sell signal on here. The importance is knowing what it is you're looking for. If there is no setup, there's no context. If it doesn't plug into the present narrative and what price action's doing, there's nothing for you to do. You just maintain an interest in that level. And that means that the price may be going the other direction without you. And that's absolutely okay. It's okay. Nobody, not one person out there is in every single move, high and low. Doesn't move like that in everybody's accounts. There's not one trader out there that's net long, net short all day long, every single day, and they're getting every piece of that pie. But it's funny how when we first start out, we feel like that's the only way to do it. And every new price run is the one that you have to be a part of because you don't know how often these things repeat with higher degree of probability. Can you do me a favor? I moved my microphone and it has one of those settings. If you touch it, it goes to mute. And I moved it again. And I just realized I may have been on mute talking. Yeah, I hope I haven't been on mute, but if you could, just let me know if you've been listening to me still. I'm watching X to see if you guys can reply and let me know that nothing's stopped in terms of the audio. I wouldn't even be able to remember what it is I covered. Yeah, awesome. Joshua, thank you. Greg, thank you. MB. So I got to be careful not to touch this microphone. So what I'm thinking is this. Okay, we have. And this is what you should do if you're brand new. Say you don't have a model. Say you don't know what it is you're trying to do, but you're doing what I suggested, which is watch live price action and look for smooth edges to be made jagged. Okay, know what the economic calendar is. So you know at 10 o'clock this morning we have a news driver coming out. Price is doing what? From 8 o'clock, higher, 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 higher. The top of that white box here or shaded area, that's that gap between the wicks on the daily chart I just showed you. So to the upside, this is open range where it could trade to. Now, you can allow for it to do that until the economic news comes out, or it may just gyrate in here from the low and this high here until 10 o'clock, and then they run that there at 10 o'clock, or they can just drop it here, never come back up there, and just go for this now. When there is a rollover event like this, if there is FOMC, um, non-farm payroll, it's important for you to sit still more than try to get in and do anything. And it sounds counterintuitive because when you go to learn how to trade and you listen to someone, you want them to only talk about what am I supposed to do? When am I supposed to buy and sell? Where's my stop? Where's my target? And that unfortunately is a problem because you're trying to get involved in something you know nothing about. You have no idea what you're looking for. So there are periods when I am trying to get in sync with price action, usually when I come back from a vacation or if I have a long holiday or if I'm ill, say I get sick and I have a prolonged period where I'm not able to watch price action. I just don't feel well. This is what I'm doing. I'll put key levels on and then I'll watch price action. Does it give me immediate feedback that supports the idea towards the levels I'm interested in? I am not interested in, but I believe it could get up here. Now, think about this. What am I describing? Now, the idiots, okay, that watch me, they see this. See, you're calling both sides of the marketplace. I'm referring to the fact that it could do this, but I'm interested in this. And we have news at 10 o'clock. So it's not high probability. If I can frame both sides, it's not high probability. If it's not high probability, I'm not calling a level and saying I'm looking for a PD array to get to that level. It just means that I'm waiting for more information, which means I'm literally in front of you submitting to the next 6 minutes or so. At 10 o'clock when the news comes out, then we'll see what price does. And then I'll call whatever I think is pertinent at that time. But right now, I'm sitting still and I'm teaching you to do the same thing. When do you sit still? When do you engage price action? How do you interpret when there is a high probability scenario? When is it not high probability? If it's not high probability, it's low probability. If it's low probability, how do you define it as such? If you can determine both sides of the marketplace at any given time, that's low probability. When it's so obvious, absolutely obvious that it's going to go one direction, and it looks real clean and everything's exactly what you're looking for in terms of the order flow being as it should. If it's bearish or bullish, it's respecting the PD arrays as it should. Then here's the level I'm looking for. This is what I'm doing. I'm looking for this. Before we even started the stream, I told you in a post that I'm interested in this. I like this right here. I like that because it would draw into the lower half of that gap. This is the consequent encouragement. And the next level here is an octant, and the liquidity is just below that. And we've moved straight up from 8 o'clock there. Now, I could be wrong. And this is the wonderful thing that you need to grasp a hold of. When you're in low probability in terms of what you think price may do, and that's what I'm saying. I don't know for certain at this very moment. I don't know what it wants to do. I'm only interested in this pool of liquidity here and here. I'm not interested in going long to get that closure of the gap. What happens if it goes up there and keeps going higher? Did I lose anything? No. To some of you on the internet, you're going to say, ha, he got it wrong. But I lost nothing. I lost nothing. I didn't put any skin in the race. I'm more interested in getting in sync with price action because we're rolling over to a new contract month. And because of that participation from March's contract into June's contract, that buying and selling, all of those fills, all of those runs in liquidity are going to be used to paint a narrative that's fake. Think about it. Everybody's dogpiling into the new contract. Some of them are shorting, some of them are going long. It's net sum zero. So there is no buying and selling pressure. But the algorithm and or manual intervention, they can continuously keep offering higher prices to get up to this level here and facilitate the idea of a short-term overbought and then allow price to go down into here or maybe over here. And then I would go back to a point of neutral and have no opinion at that point. So if it continuously keeps going higher, it's a move that I'm not going to participate anyway. I'm not going to participate in clicking anything. I'm not going to even do a demo. I'm just interested in seeing what price is doing now in a new front month. While March is still active, but everybody is moving away from March's contract into June's contract. So said it in a very short way, during rollover week, let your volume be very, very light. Don't try to trade a lot and expect to be wrong. Is that clear enough? That should be clear enough for you. And in the following week, this contract month will be absolutely pristine. You'll see everything that you'd want to anticipate and see in delivery price action. Now, if this wants to come up here, because we're like 2 minutes away from the 10 o'clock hour, if they want that, then I would want to see this here be used as a discount array to send price up. I'm not saying that you should go long. Please don't do that. Don't even do it with your demo account. Just watch. Because I want to be wrong in front of you because it will put an exclamation point to what I'm outlining here today. Knowing when not to do something is important. Like I could do a whole 50 to 60 video series of periods and things that say not to do something. But you won't want to watch it. That won't be a popular playlist, but that's the playlist that keeps you from becoming insolvent. And that's the kind of stuff I put in all the rants or the extra stuff that you think is useless in the videos. You talk too much, bro. You work too much, bro. You're going to continuously work until you listen. All right. 45 seconds and the news comes out. And again, I'm just hanging out until 10:10. I got to give myself time to get cleaned up and go gallivanting with my wife. She wants to see if this credit card still works. Oh, man. All right. And again, we'll take a view regular trading hours. There's your opening range gap for today. So we'll view the news through this perspective. And there's half gap right there. Okay. Mm. Gonna run real quick through. Yes, YM. Back to IQ. Looks like that the others looked a little bit heavy where we're at here in relationship to NQ. So would be your first presented fair value gap for this morning at 9:32. So again, that in and of itself is enough to warrant a likely retest of that too. But they could bump these relative equal highs too, leave that other portion open up there. And we really haven't seen too much activity off of data. And we're ahead of 1 day ahead of FOMC and CPI, I think, or is it PPI? I can't remember now. PPI, CPI, I think it's CPI. Either way, it doesn't matter to me. I don't care what the data says. I don't trust any data coming out of its administration, to be honest with you. I mean, it's just the facts. The last 12 years, actually, I haven't trusted anything that comes out of this stuff. I just realized something. I wrote down the wrong date on my notepad here. Trying to rush to get through this stuff so I can get with you. I looked at Wednesday's economic calendar. It's that home number for Wednesday that I miss. Yeah. One second. Calendar. Any home sales. So yeah, they released it today. I was pulling up my phone, and the default was showing January. Kind of disoriented me there. So I didn't make a mistake there. What's wrong with you, ICT? Did you forget who you was, brother? All right. So pending home sales, they released that data at 10, and then there's really nothing else to speak of in regards to that. So now you see the fair value gap right here, that, and then we have this, which is first presented fair value gap. Close, 58 half, open, half. So stay at the wick. There's your first presented fair value gap. Let's use that there. And then Let's see, does it use this to get down into first potential fair value gap, or does it want to go above it and treat it as inversion? And to know what to do and when to do it. That's what we're focusing on here. Everybody's got an opinion after the fact, but you don't get paid by having after the fact. You got to know what you're looking for before it happens. Watch the bodies in here. Let me zoom in a little bit more. We also have this over here. This could act as inversion as well to send this into first present fair value gap. So it would look like this. Kind of like the sharing of the idea of in this area. So if it can get above both of them and hit that and be a discount PD array, then it would take this and then this up here, this next gradient level would be the next point of interest. But I would prefer it to try to get down into first present fair value gap. Like if it left it is as right now as I have it, and this is actually colored wrong, I apologize. My wife has me, here he is blaming his wife. My wife has me on really short schedule this morning, so I'm trying to cram something of usefulness to you. But let's say it like this. I would like to see it use this to sell off into first within the fair value gap, and then see if it wants to trade down to this, and then if it wants to get above both of these and then access discount, then a run from here to there would be a nice bread and butter setup that I would consider. Not that you should, but that's what I'm reading price action with that in mind. But if it just goes right from here up above it, then it still would go either or. But I would prefer it trade down into a discount because the only thing we've done straight from opening is there's a little bit of a tail here, and there's liquidity for that opening range gap. So opening range gap, sell side liquidity is this low. That's it right there. And minor buy side is this high here. I don't want to keep adding annotations because that's more control Z's I have to do to get all the annotations I worked on this morning back on my chart. When price finally leaves this muck that we're in, you'll have a wonderful time with me over charts because it'll be a lot more liquid, fluid. Price action will be a lot more immediate feedback. Right now, it's just, I'm protecting you because I know whatever I say, you're going to use that to get into a trade, even despite many times me telling you not to do so. I'll be more willing to be, yes, forthcoming with my opinions when the market's more likely to keep ripping and running. Okay, so if it wants to trade down the first presented fair value gap, I would want to see it start to do so on this candle or the very next candle. And if you see this low here and that low, they're relatively equal. So any movement below that needs to see continuation and weight. In other words, stretch that candle out down into this first presented fair value gap. If it wants to trade back down into a deeper discount, it would need to do so in a convincing manner with the body going below consequent encroachment of this first presented fair value gap. But just sticking its toe in the water below this line in here, it needs to really get heavy there. So the way you would do that is you would watch price action like this. Any type of reluctance on the part of price action to get below that and start stretching out to the downside is problematic. So you would want to see signatures of weight, desire to want to get down into this area here. Since this is first presented fair value gap, discount sensitivity is in the upper half. That means this line right here to the high of it, trading down into that, if it's bullish, it would promote these levels as discount sensitivity. Okay. If it's weak, it would trade through consequent encroachment of that and then lay bodies down inside this portion here. Once it does that, then this should act as inversion fair value gap to set up the likelihood of maybe using consequent encroachment of this discount wick again. And then we would have to watch and see, does price want to trade on a closing basis below that? And if it does, that would open the floodgates to get to sell side down here on regular trading hours opening range gap low. So already you're looking at around 25 handles as a nice little bread and butter setup from here down into first presented fair value gap. On a day like this, when you're brand new, that's enough. That's absolutely, it's like an encouragement. It feels good because you watch it happen in your hands, and you're not doing it with any kind of money as a reward or a punishment if you're wrong. It's really important to have that environment while you're learning, because if you start placing the emphasis on being right or wrong because of what you would have made or what you would have lost, you're attaching stimuli that are not helpful while learning, because you have to look at the benefits of following what the candlesticks are telling you it should do or shouldn't do versus saying, I hope I make this much more, or I hope I can get that target because I'll be able to convince my spouse or whoever you're accountable to that you were right about it, So 10:15, that's where I have to draw a line because she hasn't given me the hairy eye yet. She's in there still choosing whatever shoes she wants to wear. If I talk softly, maybe she'll forget I'm out here. So let's just play it by ear. Okay, so if you look at what it just did, we entered in the upper half of the first presented fair value gap. It had a small little gap in here between that wick and that wick. And it opened, traded up, went right inside of that. So whenever you see something like this, what is it actually doing that you do need to be mindful of? Number one, it's coloring outside the lines of that first presented fair value gap. Okay. So this little wick above that, knocking out that candlestick, that's permissible to do that because it left this little gap here. Let me see if I can wind it. I hate playing around with this thing because it sometimes acts stupid, and then I wrestle with it to try to get it back and I can't. So we're at a crossroads now where we can measure its willingness to want to go higher or lower, because now we've entered into the upper half of that first presented fair value gap. I sell side in view. We traded down into it. We went up into that small little gap and bumped that candlestick's high. You see that? So when it does this, and then we touch the high of the first presented fair value gap there, that's a perfect opportunity for you to take a partial there as well. If you're tape reading in your mind, say, okay, take a screenshot of that. Matter of fact, just do that. Take a screenshot of my chart, and then you do your own annotations later on. Okay, you can borrow mine, but just make sure that you do it on your own chart. But we looked at this becoming inversion fair value gap up here, And I told you I want to see this candlestick or the next one start running lower back into first presented fair value gap. We got it. We went into here, traded up to this little gap here, and that's permissible. When price is down in here and it does this little bit of a run, it looks scary at the time. It makes you feel like it's going to go the other direction. But you got to remember, if it's going to go lower, the algorithm's designed to go up into a short-term little premium where there's an inefficiency. But look where the high of that candlestick went to. Look real close. Did it touch the consequent encroachment? No. And that's why you saw this nice little run after it hit the high of the first presented fair value gap over there, drop down, and now we went to the low of it. So what you would want to see is see price stay out of the upper half. Don't put any more bodies in the upper half of that first presented fair value gap. And then look to see if it can get down into the opening price. That's the next sensitive price level. So that's 930's opening. So that would be this. So that's your opening price. And then you would grade this wick. Okay. And then you would demand, if it wants to go to the sell side here, you would demand a body closure below consequent encroachment of that wick. But that's all I got for you today. I just got the hairy eye from her. You were supposed to be off. So hopefully this was helpful to you. It gives you a little bit of a context as what I do, what I'm looking for, when does it shift from 50-50 probability to a little bit more likely. And you can see, I mean, price action's still doing, that random stuff that everybody says I rebranded. Until I'll talk to you later on this evening with another market review. Enjoy your day and be safe.